Hey, it's Carol and Tim.
And we have something new and exciting for you.
Everything you love about Bloomberg Radio is now in your car.
The new Bloomberg Business app, now featuring Apple CarPlay and Android Auto.
Listen to your favorite Bloomberg radio stations anytime.
Plus every Bloomberg podcast, the latest news and more, all at the click of a button.
It's free and simple to use. Just download the Bloomberg Business app on your smartphone and connect your phone to your car.
The Bloomberg Business app, now with Apple CarPlay and Android Auto features. Download it free in the Apple App Store or on Google Play.
Presented by our sponsor, Interactive Brokers.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Well, talking about kicking into high gear, the buyback plan. News early this morning from General Motors announcing its biggest ever stock buyback plan, $10 billion in total. It also boosted its dividend 33%, Tim, and reinstated earnings guidance after accounting for costs of its new labor contract.
CEO Mary Barra promised better days are ahead, stressing confidence in the cash generation of GM, the execution of strategy, and expectation of growth and strong margins. This, Carol, despite minimal EV sales, a troubled robo-taxi business, and even more trouble at its battery pack facilities that has kept EV production in the low thousands.
That's right. GM's Ultium battery pack was supposed to enable the company to make multiple types of electric cars off the same platform and beat competitors to market with a ton of vehicles. Here's more from Mary Barra.
From an EV perspective, we have confidence in the portfolio we have. We're a bit disappointed this year that we were constrained by the automation to build modules. So this is not something that is fundamentally an issue with Ultium. It was more a manufacturing automation issue that we're working, and we'll be out of it by middle of next year and making improvement every quarter.
All right, that, of course, was the CEO of General Motors, Mary Barra, talking earlier today on Bloomberg. Let's get a little bit more into this story. Bloomberg News auto reporter Keith Naughton is on Zoom from Detroit. We love our auto team. They know this world so well. Keith, good to have you here with Tim and myself. How do you make sense of the news today? I mean, the stock's up, shares of General Motors up 9%. Doing a massive buyback and boosting your dividend, I get it why investors like it, but what does it say about the business if this is the best use of money?
Yeah, I mean, it's really Mary Barra kind of pleading for patience in a very expensive fashion, of course, because things have not been going so well on their technology bets. As you noted, the EV ramp has been very slow because of problems building batteries. And, Cruise, their autonomous vehicle unit, has been a bit of a dumpster fire lately with all sorts of safety problems and the CEO quitting abruptly a week ago. And they're scaling back because they're losing, $700 million a quarter at Cruise. So they really aren't getting the payoff yet on these very large technology investments. As a result, their stock's been down by double digits this year. So this is a way to ask investors to give them time.
Okay, so how much time do they need and what do they need that time for? Because Ford is running into similar issues when it comes to EVs. The F-150 Lightning isn't selling like it was in previous quarters. The Mach-E electric Mustang, same thing. It's there's this sort of shift in the way that consumers are thinking about EVs. What's going on?
Yeah, there's a few things at work. One, on the production side, the legacy automakers are discovering what Elon Musk discovered a few years ago when he tried to go to mass production with Tesla. You might recall him describing that as production hell. Well, that's what the legacy automakers are in right now. They're discovering that building electric vehicles is harder than building internal combustion engine vehicles. And so there are a lot of hiccups in both battery production and the EV production itself. That's one problem. So they can't get them out the door of the factory. The other problem is this demand issue you're talking about. There's still, rising demand for electric vehicles, but it has slowed considerably because we've gotten past the sort of early adopters who are willing to pay anything to have the latest and the greatest. And now we've gotten to that broad middle of the market, and folks are balking at the price of electric vehicles, which are higher than standard cars, and the charging infrastructure, which is still very spotty in America.
Hey, Keith, our Bloomberg intelligence team says the move to offset the effects of higher costs from the new UAW contract adds confusion to GM's electrification strategy and is out of step with the practice of conserving cash when demand is uncertain. Should they be conserving cash right now?
Yeah, well, the electric vehicle business at GM and the other legacy automakers is just burning cash right now. So if you take $10 billion and divert it into a stock buyback, yeah, that's money that could have been spent to try and right your EV business or your autonomous vehicle business, either of those. They both consume billions of dollars. So it is a good question to ask. Is this the best use of capital at this time?
So what are investors saying could be better uses of capital?
Well, you can try and, buttress your EV production and strategy and model offerings so you can become a legitimate competitor to Tesla, which still controls more than half the market and makes money selling electric vehicles.
Keith, I just want to, I want to sort of like cut you off with another one of my own questions here. So apologies. But there was an article over the weekend, I believe, in the Wall Street Journal about hybrids and the way that some companies now are sort of, they said, EVs aren't necessarily the way that we think the future is going to work. We think it's going to be hybrids. Where are Ford and GM on that?
Ford predicts that its hybrid sales will quadruple over the next 4 years, and they are pouring money into hybrids now because they recognize hybrids are more cost effective and they don't have the charging infrastructure issues. So they can be this sort of bridge to electrification. So there's this renewed focus on hybrids out of Detroit. And with a lot of legacy automakers, Toyota never went away from hybrids. They said the market wasn't ready for full EVs. Hybrids is the first step you take on the electrification journey.
Well, you did that great story for Businessweek that talks specifically about hybrids. And I thought it was really smart.
I read it in Businessweek before I read it in the journal, Keith. I promise, okay? I promise.
Everybody follows what our auto team does. I'm just going to say that. No, but it was so smart because, right, it used to be hybrids and then EVs took over, but it was fascinating to hear the reporting that you did about what we are seeing when it comes to the hybrid market and the growth that we're seeing. And you do wonder, does that continue? And, it was, I think, early October that you did that story. Do we continue to see demand in the hybrid space?
Thanks, Carol, for reading. And so you might recall from that story, one of the people I interviewed was this dentist who has a mobile dental practice. She tows a trailer around. Well, you just can't do that with an electric pickup truck because it'll deplete the battery too fast. But guess what? You can do it with a hybrid, which is what she has, because having the electric motor and the internal combustion engine actually gives you more torque, the thing you need to pull a trailer. So there are many benefits to hybrids that people are really kind of rediscovering or discovering for the first time. And so, and it does lower your carbon footprint. So it's a way to stay and start moving in that direction without any of the things you sort of have to give up to do EVs.
Amber Labardi, that's who you did.
So,
what?
Go ahead, Carol.
Well, so do we need to be worried about General Motor and their strategy?
No, I just think it's going to take longer to get there, and that's the issue. And there was, we're sort of entering this trough of disillusionment on the way the EV ramp is going to happen. It's not linear. There's ups and downs, and we're in a down.
And do hybrids provide that bridge, or do they displace EVs?
I think the way the industry views it, and particularly Toyota, the hybrid leader, is that it is the bridge. You take that step into electrification and you live with that in a way that there's fewer compromises. And hopefully during that period, by the time you're ready for your next car, the price of EVs have come down and there'll be more charging stations throughout the country, so you don't have to worry about running out of juice and having nowhere to plug in.
I might have to have you talk to my husband because he's waiting for hydrogen cells, fuel cells. So
how long is he going to be waiting, Carol?
I don't know, but he's like, that's the answer. I don't know.
That might be the question.
Keith Naughton, you are amazing. Thank you so much, and highly recommend. I'll put that story out that Keith wrote back in October about the hybrid market because it says so much about what's going on right now.
Send it to me too.
I will. Well, maybe.
Thanks.
Maybe.
Appreciate it.
If you could read a couple stories, you would have. No,
okay,
just kidding. Just kidding. Bloomberg's Keith Naughton, of course. He's Bloomberg News auto reporter, joining us on Zoom from Detroit.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. or watch us live on YouTube.
Well, as pandemic worries have faded, the travel business has definitely come soaring back, with airline traffic more than doubling since its COVID era trough, and waiting times for deliveries of new commercial airplanes mostly stretching through the end of this decade because of robust demand. But there is one travel segment that seems a little bit stuck in a holding pattern, and that is corporate-owned jets.
So wrote Bloomberg's Thomas Black earlier this month. He reports on the aviation space and noted that even though the number of flights operated by the broader private aviation industry, so that includes charter, fractional, individually owned aircraft managed by third-party service companies, pretty much all the ways that you fly around, Carol.
Totally.
Yeah.
Not.
It's almost 19% higher than it was back in 2019. That was the last full year, pre-pandemic year. Companies' in-house flight departments are flying about the same as they did, Carol, 4 years ago.
It's interesting. That's according to data from WingX. It's a Hamburg-based provider of market data and analysis on the private aviation industry. We've got a great voice on this. Back with us is Janine Iannarelli. She is founder and president of the private aircraft broker Par Avion, and she really sees daily what is going on minute by minute in the private aviation world. She's here in our Bloomberg Interactive Broker studio. Welcome back. How are you?
Oh, delighted to be here. Thank you for the invitation.
It's great to have you here. Tell me what you said, though, when you walked into the studio and you were listening to our segment on the IPO market, which seems like it's having a tough time getting going, and how that kind of related to your industry.
Yeah, just take your last guest story and slash IPO and insert the word jet.
What's going on?
That's a good question. What we have observed throughout the course of 2023, the buyers are sitting on their hands, and they've created excuses, and I would say the trade has as well for them, quarter over quarter. So here we are. We're at the end of the year. This should be the busiest time of the year in the aircraft trading marketplace, and it's relatively quiet.
Wait, I thought that we saw huge announcements from companies like NetJets buying many Cessna Citations, for example, earlier this year. That doesn't count?
In a way, no, because that's the fractional share and they need to meet demand. Actually, fractional flying is up year over year. I want to say the number is somewhere like 7.9%, whereas private flying is down 8.3% year over year.
Wait, how can those things both be true?
And Thomas Black in his story said flights from fractional operators, so we're talking about NetJets, FlexJet, have increased 41% from 2019 levels. That's
You're
the
still
data he came
flying
up with.
private when you use one of those operators. So make the distinction for our audience.
So the private sector and the corporate sector is whole ownership. These are individuals and corporations that go out and acquire the asset, and the management, the crewing.
It's the company jet.
It's the company jet. Whereas
Tom
with the
Keene
fractional,
flies all the time.
Exactly.
No, go ahead.
you're buying a piece of an airplane. And so you have access to uplift pretty much on demand, but you don't own the whole aircraft and you don't control the operation of it.
This is exactly what our own Thomas Black wrote about earlier this month. And the question is that I have for you is that era kind of over when it comes to private ownership?
No.
We've seen pushback from shareholders about flying private. So now, or about actually these companies owning corporate jets because of the carbon footprint. So companies are now, not actually owning their jets outright and instead using those fractional services, which do offer the on-demand private flying. So the benefits of flying private without actually owning that asset.
So it's a conundrum. I don't think demand has diminished. It's just action has diminished. We really don't see people pushing away from private jets and looking for other means of transportation. It still is the most efficient form of moving goods and services, goods and people around the country, around the world.
But they don't want to own it.
Not necessarily so. I mean, I personally have not experienced people say, sell the jet, because of all the issues that you just cited. There are ways to reduce their carbon footprint, smart flying, direct flying in the United States is going to lead the way. Operators within the United States are going to lead the way to that goal of 2050.
But Janine, you broker deals, right?
Correct.
So how much is your deal flow down this year from, I don't know, is it the peak post-pandemic that you measure against? I'd be curious about that. And also where it was maybe 2019.
So good questions. My business is off significantly, but I attribute it to the aircraft that I'm actually offering. I mean, the market's sort of...
You don't like your inventory?
I love my inventory.
But it's not what people want?
It's not in favor with the market today. The most active segment of the business aircraft marketplace, I would have to say, is the small jet. That is the aircraft that initially led the decline and then started the rise back out of the global pandemic.
So what is this, like a 6-person?
Exactly.
Yeah.
I put it more in a dollar perspective, but 6 to 8 passengers, somewhere $2 to $7 million. And the aircraft range is going to be anywhere from about 1,000 nautical miles to 1,500.
So what don't people want then?
Is it now?
Yeah. What is it that they don't want?
It seems to be the category that I would call the super midsize and the ultra long range aircraft.
Why don't they want those?
It's a good question. It's a really good question. So first of all, if we talk about the ultra long range, that's the pinnacle of the marketplace. And the price point for those airplanes is anywhere from $50 million on
This
and
would
on
be
up.
like a Gulfstream G650 type
Correct.
thing?
Yes.
Okay.
Tim's a little
among
bit
them.
into planes.
I can tell. So that seems to have fallen out of favor. I mean, there are buyers out there, and there are plenty of inquiries. I mean, if I just look at the number of inquiries I've received year to date on every single aircraft I offer for sale, it just boggles my mind that not one person has stepped up to make an offer. Maybe more interesting is, let's say I get 200 inquiries over the course of 3 months on an aircraft. My guess is 10% are really going to buy an aircraft, but less than 10% of that 10% have actually done anything.
Forgive me, but do interest rates matter? I mean, when we're talking at this type of money, they don't matter for real estate, but they matter for, at least that's what high-end real estate brokers
I mean, do they
tell
finance
us.
these deals? That's a good question.
So another good question. My personal history is that I can count maybe on 2 hands how many people actually needed financing throughout my entire
It's a cash
career.
deal. Is it typically a cash deal?
Needed versus using financing are two different things. There are plenty of people who could pay, outright for a $40,000 or $60,000 vehicle, but if they get 0% financing, then they're going to take the financing.
Exactly that. Now, I have a number of prospective buyers that they may pay cash outright and then refinance later on. Most of them do that with a financial institution that they already have a business relationship with. The odd inquiry that I may receive for aircraft financing, frankly, is a little bit of a red flag for me, because they shouldn't be asking me. They already should have that in place.
Right. Right. They've got their bankers. They've got the bank that they've been working with for years on everything else.
They're qualified, the
and they
KYC,
just come in.
everything.
It's interesting. I'm thinking about our audience. So how do you then use what you are seeing to maybe tell you what's going on in the global economy? Is it an indicator for you, or is it just maybe your business, your industry is going through some changes?
I would say flip that and say business jets are the indicator. And they always have been. Now, I think we're writing new history, and have been since 2019, because you could take the playbook and throw it out the window. Looking back over 23, I was musing over the fact that we're going to chalk this year up to a year of rebalancing. And I'm wondering if this was not the downturn that always follows a great upswing. And 24, because I'm going to use it to project a little bit, is going to be relatively quiet. But the driver for that is mostly the presidential election and the uncertainty that comes along with who will be our new administration and what policies will go into effect.
Well, President Trump was pretty friendly to private jets.
To a certain degree. I mean, some of those,
there were tax breaks that were given to people who used private jets during the coronavirus pandemic, for example.
Well, that's true. The bonus depreciation was a huge driver to motivate people to buy aircraft.
20 seconds. What are you worried about in terms of the presidential outcome and in terms of regulatory or oversight? And I've got to ask you to be very quickly.
I'm mostly concerned about tax implications. There's a lot of those expiring in 25. That's really the bigger concern.
Really fascinating, right?
I could talk about this all day.
I know. It's a world we love talking about. We didn't even get into eVTOLs, which I know is a big thing. Next time. Come back soon. Love to continue the conversation. Janine Iannarelli, founder and president of Par Avion, a private aircraft broker. You can check out some of the stuff that she is involved in on her website here in studio. Have a good holiday.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
That's right, everybody. Santa Claus is coming to town at the most wonderful time of the year. The air is crisp. Bloomingdale's has its holiday window display up. People are decorating their Christmas trees and decking the halls. And a large team of Santas are coming to town, appearing at malls and retail outlets around the country. He's everywhere. And sometimes she's everywhere. I'll explain that in a moment.
That's true. Hey, this year, things are a little bit different than years past, though. Demand for Santas is actually far exceeding supply, at least according to our next guest, who knows quite a bit about goings-on at the old North Pole. Mitch Allen is the founder and head elf of Hire Santa. It's a Santa Claus talent and staffing agency. And what it does is it places Santas at events, parties, malls, and more all over the U.S. Mitch joins us on Zoom from Southlake, Texas. Mitch, good to have you with us this afternoon. So the Santa biz doing pretty well in 2023, no?
It sure is. We've had more demand for Santa Claus entertainers than we've ever had before, and all types of it, whether it be a home, office, retail establishment, malls. Everyone wants to associate themselves with Christmas through the use of Santa.
Totally get it. I'm also a fan of Elf on the Shelf. Just going to put it out there. Hey, Mitch, so are numbers up? Demand is up from what? Pre-pandemic levels? Like I don't know, is it just you've been seeing organic growth? Has there been a recent peak? Give us an idea. Give us some perspective.
Sure. So here at HireSanta.com, we've seen the demand for Santas, people reaching out to us, is up over 36% over last year. And last year was record demand, even higher than pre-pandemic. And that's turned into more events. Our actual events that we've booked is up over 152% over last year, and many times that over pre-pandemic levels. So people are using it. And what's interesting is we don't necessarily have a Santa index, but that's what I'm calling it, that small and medium-sized businesses are really using Santa this year. I think that's going to be a blockbuster year for small and medium-sized businesses if the demand for Santa Claus at these establishments is any indication.
How much does it cost to rent a Santa?
Yeah, so it really depends, date, time, location, and how long you need Santa. But,
okay, during the Christmas season. I'm not talking about a
July.
About a July Santa here.
Everybody's invited. We're talking about 4 hours. I need Santa.
Right. So if you need Santa to come to your home or office for just a couple of hours, you're talking about $200 to $400 per hour for a Santa Claus entertainer. Now, if you do it for a mall, the hourly rate is obviously much less.
So do Santas, do those who really look like Santa? Sorry, kids. I hope none of the kids are. Man, we should have done a disclaimer. If there are kids in the room, get them out of the room. I'm sorry for everybody in the control room. Yes, Virginia, there is a Santa Claus.
Okay. I don't know where you were going with
I'm going to be really careful. But Mitch, so for those who, really look like Kris Kringle, do they get more money?
Absolutely. So at Hire Santa, our Santas, we like to say, have a real beard, a real belly, and are real jolly. They've got that twinkle in their eye, that love and joy of Christmas in their heart, and they really do personify the image and personality of Santa Claus.
What about the demands that you're getting right now from different people across the country who are saying, well, you know what? I don't actually want a Santa that looks or sounds like the traditional Santa Claus. We're looking for more diversity when it comes to Santa.
Maybe I want a Christine Claus rather than
what are you getting requests for?
Kris Kringle.
So diversity is one of the big trends that we're seeing in the Santa Claus entertainment space. We have a number of Black Santa Claus entertainers as well as Spanish-speaking Santas. People are wanting to have a Santa that looks and sounds like they do. We even have a deaf Santa that we send around the country. He's entirely deaf and speaks ASL, American Sign Language. So we've seen the demand for we've seen the demand for diverse Santas really grow up. And as you pointed out, we actually have a couple of female Santas who are terrific. You would not know that they are females. They look and act like Santa and are really great entertainers.
You mean so they're not actually being a female Santa? They're actually being a female that is pretending to be a male Santa?
That's right. You think of like Tim Allen, glue-on beard. You would not know unless you actually saw them outside this suit that they were not actually Santas. But yeah, diversity is one of the big trends. We also see experiences. People just don't want to have their traditional picture with their child on the knee of Santa. They want to have an entire experience. And so many of our clients are really increasing the experience where there's lots of sort of Instagrammable pictures and other types of experiences, cocoa, hot chocolate, and those types of things, along with the picture with Santa.
All right, Mitch, is there a Santa school?
This is one of the surprising things that people don't realize. There is a vibrant Santa Claus community out there, whether it be online or in person, lots of organizations. There's Santa schools and conventions around the country, and that's where we go and recruit our Santa Clauses for HireSanta.com.
Hey, how seasonal is your business?
Well, the actual delivery of our service is extremely seasonal, about 6 or 7 weeks, but it's a full year business at Hire Santa. The first half of the year is really about sales. It's getting those large contracts, those malls, those retail establishments. We're working and then we're trying to get those contracts as well as we're trying to get more Santas. This last year, we added over 1,100 Santa Claus entertainers to our database alone. And so it is full season, but really it's go time. It's fourth quarter during the last part of November and, of course, all of December.
All right. So what's interesting is you shared with us some research that you guys have done, and some of the Santas talk about their best experiences of 2022, which are incredibly heartwarming. But I want to go to the worst experiences of 2022. What are some of the rough experiences? We have about 45, 50 seconds left. Just give us a couple.
Well, the rough experiences are really when Santa gets sick or injured. Every single year for us, we lose Santa Claus entertainers. You can imagine they're older gentlemen. They're susceptible to COVID and negative outcomes with that. We've had this year alone, we had Santa's already in a car accident. A wife got sick. So those are really heartbreaking themselves, as well as you really get the touching things whenever a child is wanting something, they're sick or their parents are sick and they're wishing something for them. But it's a wonderful time, and Santas really enjoy spreading that love and joy of Christmas.
I thought you were going to tell me about the Santa that flubbed the lyrics to Frosty the Snowman at a daycare.
That's what you were expecting.
That's what I was hoping for.
The kids at the daycare didn't
a little
know,
levity, a little levity.
Yeah. We get that a lot too. And when we've actually been on air and asked somebody, Santas, to name the reindeer, and they just froze. And so Santas have to know the names of the reindeer.
There are a lot of them.
Mitch Allen, Merry Christmas, Happy Holidays, founder and head elf of Hire Santa, joining us from Texas, where there's Santas.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Every now and then, a story hits so hard it gives you the chills, and this is certainly one of them. It's about deepfake pornography, images that have been digitally manipulated to depict an individual doing something they did not, like in this case, posing naked, and about a group of young women in a New York City suburb horrified to learn that their photographs had been manipulated and posted online, and they ultimately took matters into their own hands.
It's the cover of the new issue of Bloomberg Businessweek. It's out on newsstands later this week, but you can read the story now on the Bloomberg terminal and at bloomberg.com/businessweek. The story by Bloomberg News investigative reporter Olivia Carville and Bloomberg News cybersecurity reporter Margi Murphy, both of whom join us now. Olivia here in our Bloomberg Interactive Broker studio. Margi joins us from our San Francisco bureau. Margi. Also here's the editor of Bloomberg Businessweek, Joel Weber, here in our Bloomberg Interactive Broker studio. Wow, Joel, how did this story get on your radar, get on their radar?
Olivia and Margi pitched it, and from the moment they brought the idea to us, we were mesmerized and then more honestly horrified. And we felt like it was a story that we had to do, and we needed to do it on the cover to make sure that the world found out about it, because it is a perhaps frightening sneak peek at the future and the lack of of real common sense and laws about where generative AI might possibly take us. And the beginning of the story is like your worst nightmare. Olivia, why don't you take us there, because it's ultimately where the
Tell
story
us about
begins.
Cecilia.
So the story starts in Levittown, Long Island, which is an interesting place to start. This is the birthplace of American suburbia, the first post-war US suburb. And this group of teenage girls who had all attended the same high school discovered that their photographs that they'd posted on social media had been manipulated into deepfake porn. That is, fake pornography created using deep learning models or artificial intelligence. And Cecilia Luque, who opens the story, discovered this while sitting in a car in a parking lot in a strip mall in Levittown. And as she's looking through this website that a friend had sent her, who had also discovered the photos, she sees images that horrified, disgusted, really scared her. These are photos which showed her being digitally undressed, very graphic images. Content on this sex site included people posting about her being raped and murdered. In some of the cases, the images, she was just a child, she was 5 years old. And she also saw photos of friends of hers who attended the same school. And it was that night, New Year's Eve of 2020, that news of this website and these deepfake images really spread across this suburb in Long Island.
Not them at all. In other words, those images obviously altered, right? They knew it. Like, they went through it and they're like,
But not obvious to anyone else.
Exactly.
And that's where the horrifying part comes in. Go ahead, Olivia.
Yeah, I was going to just say that for the woman now, because they're 22, 23, at the time they were 18 or 19 years old, and the scariest thing was looking at these photos where they'd been undressed and realizing that they look real enough that anybody else who sees them is going to believe it really actually is their bodies. So for Cecilia, it was looking at this nude image and knowing that the breasts weren't hers,
right,
but also realizing that most people who saw this image would think that they were.
So Margi, let's bring you into this, an incredible story. So not a problem. You call the police and you say, this isn't me, and it's done, and they take it down, right? It's that easy. I'm being sarcastic.
Yeah, not quite. At the moment, there's no federal law prohibiting deepfake pornography. So the challenge that these girls had were, they were so incredibly brave. They did this investigation mostly on their own, figuring out exactly who had created these images of them, and they took them to the police, and there was very little legal recourse for them to get justice. And in fact, it was only after searching through everything that Patrick Carey, the former classmate who'd been posting these images, looking through everything that he'd posted, they'd seen that he'd actually accidentally posted real child sexual abuse material, and that's what they got him on. It wasn't on the deepfake pornography at all. And that's an issue, that's a frustration being felt by women around the world, even though certain states in the US do have laws around deepfake pornography. It's just so patchwork across the US, and internationally there are issues with the law as well, because the technology is just advanced just at such a breakneck speed. Just lawmakers haven't been able to keep up with it.
What about the companies and the platforms on the AI front? Like, what did we learn about what they can and can't do or aren't willing to do, Margi?
Right. So the issue with a lot of the technology that's around now, and that from our reporting we saw was really popular for creating deepfake pornography, and even child deepfake pornography, a lot of those tools are open source. So there's this kind of divide in Silicon Valley. You've got the developers who've created this really incredible image generation technology that they want to be used for good, who believe that it should be kept out in the open for everyone to use, and not gate-kept by like big tech platforms who have typically provided services, and you might enter in a a prompt and you get your image back. Whereas with the open source technology, anyone can go and interact with the code, and therefore you can play with it. And even if a developer was to put a guardrail in place, like prohibiting adult content, it's relatively easy for someone to go in and change that. And so that's opened this Pandora's box. We've got all these open source technologies that even when a developer realizes are being used for bad, the cat's out of the bag and people are already exploiting it.
Olivia, the story starts in Levittown. It's centered around Levittown, but it spans the globe. What happens in New Zealand? What's going on with a former police officer named Will Wallace?
I think that was one of the most remarkable parts of reporting this story, is that it really is a dual narrative. You have the girls in Levittown investigating the predator who is posting images of them online on the sex site that an ex-cop in New Zealand has discovered is already been posting images, deep-faked images of New Zealand women as well. And so he starts an investigation into the man behind this website. And it's very rare in journalism, or at least in my own career, where you have a story that has this dual narrative where you can weave them together and see an investigation unfolding in suburban New York, and at the same time in New Zealand, of all places, which happens to be where I'm from, there's an ex-cop trying to work out who was behind this website. I remember one night I was driving back from Levittown to New York, and I called Margi to talk to her about an interview I'd just done with Anna, who was in the story and ultimately discovered the identity of Patrick Carey, who'd been posting the images, and took that evidence to police. And I called Margi. I was excited because finally we had this key piece of the story to tell her about it. And that's when she responded saying that she had discovered that there was also this whole other part to the story where there were these vigilantes, this movement trying to track down who was behind this website. And there was an ex-detective from New Zealand who had been leading this fight to kind of combat deep fake porn and to take down this deplorable internet sex site.
So where do we go from here? Because as you mentioned, there's no federal law prohibiting any of this, Margi. But what happened in New York State?
So in New York State, we have seen the district attorney in Nassau County, which is where this case unfolded, actually put forward or introduce new legislation trying to target deep fakes. The problem is that, what do you focus on? Is it the companies that are releasing this technology? Is it the regulators who can't catch up to this technology as it's being rolled out? Or is it the predators and bad actors like Patrick Carey who are abusing it? And
yes, and yes. No, and I do also wonder, and Margi, let's bring you back in. I mean, in terms of police and law enforcement, how high up on the list is this in terms of prioritizing the things that they focus on?
Yeah, absolutely. One thing that was really interesting about Will Wallace, who you guys have just mentioned, he obviously is deeply involved in this website. It was a passion project of his to kind of find out, help victims find the people that were posting these pictures, but also uncover who the admin of the website was. But because he has a background in the police, he has this, he really understands what it takes to be able to actually gather evidence, bring a good tip to law enforcement, and see that actually be followed through. And he would tell me how frustrated he was every time he would give a tip to law enforcement, different local law enforcements all around the world, and not hear anything back. But he also understood that it's so challenging when there are certain skill sets you need to be able to investigate this kind of crime. There needs to be better education so that when a victim comes forward and the first person they're speaking to, that they understand that yes, there hasn't been a physical crime, but this cyber crime is just incredibly traumatic and super damaging, and that person is a true victim. And additionally, when the robust laws aren't in place for prosecutors to deal with people once they've found a suspect, that all is it's incredibly hard for police officers to do their work.
When Patrick Carey, when it finally did come down on him, Olivia, Tim and I were talking about this before we got going, before you guys came into the studio. So he ultimately was sentenced 6 months in prison, 10 years probation, lifetime status as a sex offender. can't own a smartphone anymore, or any device with a camera, or be within 1,000 feet of a school or a playground. 6 months, but he was out in 4 for good behavior. I don't see any good behavior here. That to me is not even a slap on the wrist. So it just kind of speaks to law enforcement not really necessarily respecting the severity, because you talk to these women and they definitely felt harm and pain, and there was an impact.
Oh yeah, there's no doubt about that. I mean, a lot of these women have sought out therapy since this. One lost 20 pounds from stress. One dropped out of college. 3 I talked to carry pepper spray in their handbags, and 2 carry knives with them now. They're so scared of what was done on the website, not only what Kerry was posting, but the hundreds, if not thousands, of strangers in the world who saw those photos and tried to reach out to them. One of the craziest parts about this case is that Kerry also included the girls' names, addresses, social media information, so they had these awful messages and phone calls coming through to them, people harassing them for months. And one of the threads on this site had over 30,000 views. That's 30,000 people looking at a fake porn image of you where they're writing about you being raped and murdered. Mm-hmm. You know, the fear was real when I was talking to these young women, and there is a deep-seated frustration in Levittown from their families, teachers at the school, the girls themselves, that Kerry only received 6 months. He was out within 4 months, and he's back in the neighborhood now.
It's amazing.
I think the greater thing here, and obviously the circumstances of this particular story are totally frightening. But it also does just speak to this greater challenge that we're going to be living through now. We have a technology that the world is not prepared for, and this shows you how unprepared we are for it. And sure, there's a lot of good that can come from it, but there's also your total nightmare. And, you know, props to Olivia and Margi for being able to tell this story.
Well, and coming off of OpenAI and the debate within that company about the ethics and the concerns about generative AI and where it takes
almost
us
the perfect time for a story like
Joel,
this, right?
you did it once again.
He does. His timing.
They did it once again.
You guys did do it once again. Olivia Carville, investigative reporter at Bloomberg News. Margi Murphy, she's cybersecurity reporter at Bloomberg News. Incredible story, the cover story, most read, the Bloomberg Big Take, and our thanks to Jill Weber. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, getting ready to wrap up the Wednesday trade. Just about 17 and a half minutes left in today's trading session. We have got, when I look at the S&P 500, kind of half of the major industry groups are higher, half are lower. But it really is, once again, about what's going on in the Treasury trade, because we are down again. I'm looking at a 10-year, 4.26. Who'd have thunk?
I mean, we were talking a 10-year at 5% just a few weeks ago.
6% people were talking about, for even the curve.
Ooh, we should have Katie Kaminsky back on and see if she's still sticking to that.
We should bring her back. That's a really great idea. All right, let's see what our Drive to the Close guest has to say about all of it. Amy Magnotta, she's Co-CIO at the independent investment advisory firm Ategenos Capital. She is on Zoom from Pennsylvania. Amy, good to have you here with us. This yield trade... Let's go there. Would you go as far to say we are at peak yield on the U.S. Treasury yield curve? And, and does it mean that ultimately we get to some kind of recession? Does the economy slow down that much?
Our view is that we're expecting the economy is growing pretty solidly. So we had the GDP revision come in today. Up 5.2% real GDP growth in the third quarter, and we're running about 2% for the fourth quarter. So that's pretty solid, especially given what the Fed has done to try to bring down inflation. So our view is more in mid 2024 that we might hit some sort of soft patch or mild recession, with just given the lagged effects of these interest rate hikes on what that means for the consumer. And then we also have an unemployment, and then we have stimulus that's kind of run out.
Amy Magnotta, what is the evidence that you see today, end of November, almost the end of a pretty incredible rally in bonds and stocks so far for the month of November? What's the evidence that you see out there right now to lead to your conclusion that we'll see some softness in the second half of next year?
I think there's some weakness. So our view, just to be clear, from now till kind of year end, early January, we're still pretty positive on the equity markets, and a couple of reasons for that. Seasonality is very strong. November, December tend to be very strong periods for equity market returns. Breadth's been pretty solid. Momentum has been building, and credit spreads have been making new lows. So I think that's all very supportive for equity markets for the next, say, 8 weeks or so. I think our concern is more as we hit 2024. Could see some weakness in the consumer, could see some, there's a number on the consumer confidence survey yesterday that jobs hard to get increased a little bit. So we could see some maybe softening there in the employment, in the labor market, and maybe some weakening in the consumer as we get through to 2024.
It's funny. It's interesting to listen to you, and I feel like it's kind of, you hear it even among the Fed speakers. There's not just one narrative. Some of those Fed speakers that we are just even hearing over the last couple of days, some are saying, okay, we're good. We think we're done. The Fed should be done. And others saying, maybe not, that inflation isn't where it should be. I'm hearing a lot of ifs, coulds in your conversation, and I get it, because I think, as we talked with our Mike McKee, it's not an exact science in terms of of managing the economy. The Fed doesn't have a ton of tools, and like I said, it's not like you just step on the brake and everything stops. There are delayed effects and cumulative effects. So having said that, you have conviction that maybe stocks continue to rally into this year. What else do you feel like you have strong conviction about when it comes to the investment environment?
So we're, as I mentioned, we're pretty positive on equity markets. There's some other areas where, when you look at equity markets year to date, it's certainly been driven by, the index returns kind of mask underneath. It's been driven by, large cap, mega cap growth companies. So we're finding some opportunity in other areas as well. Like
what?
Sure. So U.S. infrastructure is one area that we like today. We've had the Infrastructure Investment and Jobs Act in 2021, some allocation to infrastructure projects in the Inflation Reduction Act last year. And that money is just really starting to be allocated and spent. So we think that's an attractive area.
What specifically within it? So what specifically within infrastructure?
The way we allocate portfolios, so we're asset allocators, and we build total portfolio solution for our clients. So we're going to allocate to a broad-based ETF that's targeting companies that can benefit from that increase in infrastructure spend.
That's an interesting thought on macro trends. What are some of the other macro trends and where you're allocating capital?
Japan is another theme that we like today in Japanese equities. A couple reasons for that. Fundamentals have been improving. Earnings growth is improving. A lot of the shareholder-friendly policies that companies that we've been talking about for a number of years are really getting put into play in Japan. So that's also positive. Relatively loose monetary policy compared to some of the rest of the globe, and valuations are pretty attractive. So that's another area where we liked. And we've seen the dollar sell off a little bit here more recently, which could benefit international equities.
Yeah, and then the Nikkei definitely has had quite a bounce back, certainly this year, certainly from some of the lows we saw earlier this year. When you talk about Japanese equities, by the broader market, or again, do you start to get picky about some specific sectors within Japan?
For us, again, this theme we feel is pretty broad-based, so we're going to allocate more broadly through a broad-based ETF in the Japanese equity markets.
Natural resources, also a favorite. We just a favorite of yours. We've just got about 45 seconds left here. What specifically, when you think about natural resources?
Sure. I think another area of the market that is attractively valued relative to the broad S&P 500 companies there, again, better capital allocators more recently. We still think some structural supply demand that's favorable, and then more short term with some turmoil in the Middle East might also cause a problem. And then just the regulatory environment is really pretty tight for energy related companies, and we think that's a positive.
Does that mean like the major integrated oil companies, the drillers, just real quickly? Okay, yeah. So you like the big names, the household names.
Yes, the larger. So again, we're allocating through a broad-based ETF, but about 80% of that is energy companies.
All right, good to know. Good to know. Amy Magnotta, she is Co-CIO at Ategenos Capital. She's joining us on Zoom from Pennsylvania.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.